Good afternoon and welcome to the program. This is Business Incorporated. I am Businamafai. It's Thursday, the 7th of January 2016. Coming up on the program in the next 30 minutes, global stock markets crushed with China's stocks halted. Our shares plunged more than 7%, 29 minutes of trade. Oil prices trade below $33 a barrel as China turmoil rattles investors around the world. Meanwhile, Netflix, an internet content provider, launches in 130 countries around the world, including Nigeria. Now let's get the story started. Internet content provider Netflix has announced the availability of its services in 130 new countries, including Africa. Before now, Netflix was enjoyed in just 60 countries, but now in almost every country on planet Earth. The announcement came during the opening keynote at the 2016 Consumer Electronics Show in Las Vegas. According to Harrison Weber of VentureBeat, Netflix's massive expansion serves as a counter to its recent slow growth in the United States. Some other countries that will be able to access Netflix include South Africa, Singapore, South Korea, Saudi Arabia, Vietnam, and India. The arrival of Netflix also in Nigeria will mean bigger competition for video content services like Iroko TV, though it's too early to say how that will affect market share. Let us get the bigger picture from the World Bank, warning of new threats to efforts to reduce poverty in the developing world. In its twice-yearly assessment of global economic prospects, the bank forecasts only a modest increase in growth. The report also says that there has been an increase in risks to the global economy. The bank's chief economist suggests that China's economic slowdown is a potential danger. The World Bank does think that global economic growth will pick up in 2016. Analysts say this year's forecast of 2.9% for the global economy compares with 2.4% last year is still not robust. Now let's get to the markets. Different words being used to describe the state of the world markets right now. Trading on mainland Chinese markets was suspended for Thursday after shares plunged more than 7% for the second time this week. The circuit breaker rule, that's a mechanism introduced to stem volatility in the market, was triggered in the first 30 minutes of trading. Traders went home. Investors are nervous after the China's central bank, the PBOC, moved to weaken the yuan, indicating Beijing's readiness to boost exports as China's economy may be slowing more than expected. And as we speak right now, the German market is down below the 10,000 psychological level. All the major stocks are getting routed from Volkswagen to Daimler Chrysler and a number of others. That's the story we're following right now. Let's cross over to the Frankfurt Stock Exchange. DWTV financial correspondent for Channel Television, Conrad Bossen, is live there at the exchange, looking over the trading floor and bringing us up to speed. Good afternoon, Conrad. Welcome to the program. Another day of insanity. That's how it's been described right now. Very ugly. Also the description, the world stock markets triggered by China. How bad are things holding out there where you are in Frankfurt? Talk to us.
It's really a very, very bad picture today, I can tell you, Bosun. The German stock index DAX is down 3.5% compared to last night's closing, and the picture looks even a bit bleaker if we look at the weekly performance of the German DAX so far. This is a decline of round about 8%. Quite obviously, BMW, Daimler, Volkswagen are among the biggest DAX losers, companies which have very strong business ties with China. But I also have to say, next to these companies, down heavy losers are Commerzbank, also the large utilities, E.ON and RWE. What do these companies have in common? Well, they all have a reputation of not being the strongest in their sector, if I may say so. And also, they have a reputation of potentially finding it difficult to get financing on the international finance markets. So it looks like that the global rout on the stock markets has triggered concerns among investors about the financing situation for many companies, including companies that generally have a not so bad credit rating.
Conrad, how rational is this market, in brackets, misbehavior? Are investors just panicking, or are there reasonable or rational fundamental concerns about the state of the world economy, about the state of the market that's getting everybody panicking, running around the streets?
Quite obviously, there is panic in the air. I can tell you with declines like this, this is not only rational reasoning, and this panic has to do with concerns that, some sort of speculation bubble is about to burst in China. We have to remember that also the stock market frenzy in China, the huge increase of stock prices there, had a lot of irrational trades. Lots of these shares were extremely overvalued before this sell-off started. But we also have to take into consideration that there are fundamental concerns about the economy behind all this. The World Bank just came out with its growth forecast for the whole year. It's lowered this growth forecast because it says that some sort of perfect storm might hit the global economy. And by this, the World Bank means that a simultaneous slowdown in emerging economies might hit the global economic growth this year. And as if to illustrate this and to underline this, about an hour ago, the National Statistics Office in Brazil updated the industrial production data there. The data is from the month of November, and the decline from October to November was 2.4%. That's twice as what economists had forecast. So it really looks like the situation in the emerging economies, some of them at least, is worse than expected, and that's the major concern on the markets at the moment.
Yes, Conrad, it's very nice of you to bring in those latest economic data. Look at what we saw early today as well from Europe, the Eurozone. Unemployment data, Italy, well, some nice, trending downwards, unemployment 11.3%. Germany, however, retail sales data missed forecast, factory data 1.5% for November orders. What does this tell us about the state of the European economy, the Eurozone economy? What are expectations for Mario Draghi's ECB at the first ECB meeting for 2016?
Well, the situation in the Eurozone, you mentioned it, looks still quite good. Factory orders in Germany are up. The unemployment situation in the Eurozone is at the lowest in 4 years. Of course, the situation on the labor market here in Europe is not really good yet, but it has continued to improve. The forecast for the economy in the Eurozone at the moment, and I'm looking back at the moment at the last quarter, the average forecast is that it will probably have increased by 0.4 to 0.5%. I also have to add that most economists are convinced that this growth here in the Eurozone is not strong enough to really offset the downswing, the global downswing in commodities markets. What does this mean for the European Central Bank and its outlook? Most probably the ECB will continue to be very generous in terms of money supply, and it might even add to the money supply, because there is no inflation in sight. It's even possible that inflation data will remain near zero, and that's much worse than the forecast the ECB officially has now.
Okay, Conrad, I wonder how we manage to sleep at night tracking those numbers as financial journalists. It looks like a lot of nerve-wracking, keep you awake at night. Thank you very much for today. Conrad Boston, my colleague at the DWTV for Channels Television at the Frankfurt Stock Exchange. When we come back, a new report from Exotic Partners in London says Nigeria has to devalue the currency faster than many people think. What's the rationale behind this two-page report released early this week? Today's Thursday. It came out on Monday. We'll talk to Alan Cameron in London via Skype. We'll get more insight into it. Stick around.